Joining us right now is J.P. Morgan's Global Wealth Management Head of Equities, Stephen Rees. Stephen, good to see you.
Great to see you.
First, let's talk about what's behind this move. Has sentiment all of a sudden changed? And, of course, this is the week where the second quarter earnings numbers really begin in earnest. Want to get your take there as well.
Yeah, I think the market was worried about Brexit. That came, and it hasn't gone yet, but I think people are a bit more calm in terms of the impact that we'll have here in the U.S., which is very minimal. Now all the eyes are focusing on the earnings season, which is kicking off this week. And I think the big news here is that this is probably the last quarter of negative earnings trends that we're going to see, hopefully for a while, because the price of crude oil has recovered and the dollar's been a lot more stable. So we think already in the third quarter, in the fourth quarter, and certainly in the next year, you're going to see much better earnings trends. And that's what the market's focusing on.
Wow. So where is the growth right now, would you say, in earnings?
Yeah, I think this quarter is still going to be tough overall. The overall numbers should be down about 4.5%. But if you look at some of the sectors, healthcare, industrials, technology outside of Apple probably looks pretty good as well. So I think you're going to see some pockets of growth. But again, the big news is third quarter and fourth quarter beyond, I think things are going to look a lot better.
Stephen, I'm having a hard time relating to this third quarter or fourth quarter are going to be actually flat because we've had 5 consistent quarter of earnings recession. And that's just been consistent. And for the third and fourth quarter to actually go positive, we're going to need a lot of things to go right because the dollar has gotten stronger off of this Brexit concerns that we're talking about. The job numbers actually didn't include Brexit in it. It was actually pre-Brexit. And we're seeing the 3-month trend downward. I mean, the consumer is getting stronger. But think about the largest sectors of the economy right now. Banks, they have the strongest headwinds, right? And they are actually the ones that can push this economy forward. But guess what? Interest rates are so low. So where do we go for the third and fourth quarter given that backdrop?
Well, it's a couple of things. I mean, the energy sector, you're looking at a down 80 to 90% year-over-year decline in profits. And it's quite small in terms of the overall picture. It's about 7-8%. So we're talking about big swings off of a small base. You're right. Financials will continue to be pressured. We have lowered our outlook there in terms of the earnings. We're actually looking for negative earnings all year. But don't forget about healthcare, consumer, even industrials. I mean, these are much larger parts of the overall S&P 500. We think you're going to see healthy trends there. In fact, consumer could be up close to double digits this quarter.
How much of that good news, though, is factored in those consumer stocks? I'm not going to make you name names, but broadly speaking, of all the different sectors, is that the most fully or overvalued?
The valuations do look full, but if you look at it, the earnings picture, I think, can still take a lot of these stocks higher. We have definitely become a lot more selective in the overall consumer space, really focusing on just a handful of online retailers, companies that have a differentiated product or service that's not impacted by what's happening at Amazon, and really focusing on companies that can beat earnings estimates. Because if you're trading at a high multiple, it's all about what the earnings are going to come in and how that comes in relative expectations.
And bond proxies, right? I mean, people should be very worried about the bond proxies because when you look at the utility sector, I mean, some trading at 30 times PEs, and that's what's really carried the market. So when we were at an all-time high last year, they're up 20% since then.
So we're trading cautiously. They're bond proxies, but they're not bonds. And so the valuations to us look very, very full. And while I think the rate picture, we're pretty cautious on the overall rate outlook, and I think that supports dividend stocks. Buying utilities and telecom here, I think you have to be pretty careful because at any sign that rates are going to move higher, you could see these sectors give back some of their gains year to date, which have been up, close to 25%.
If earnings start to improve, and this is the bottom here in terms of earnings, you have to expect businesses start spending money again. I mean, that's been one of the real weak spots in the economy, business spending. Is the election a catalyst for that?
Well, I think there's some concern about the election and sort of people thinking, what's the impact, who's it going to be, and how does that impact the overall policy?
But you get more clarity.
Clarity behind us is a great thing. So I think oil prices having rebound, clarity with the elections, clarity hopefully with Brexit as the months come on, you hopefully will see more business spending, which could drive the recovery in the U.S. Higher. We haven't really seen much recovery. Growth is still subdued, and that's our outlook. But I think for the market to really go up higher from here, you do need capital spending to come through, more jobs, higher wages, and we're starting to see some signs of that.
Would you put money in Europe post-Brexit?
We're selectively adding here. I mean, I think the dividend story in Europe, and that's really was our focus when the market traded down a few weeks ago, by high-quality, export-driven companies that will benefit from a weaker euro that offer above-market dividend yields. We really haven't seen the income securities and the income equities in Europe outperform that much like we've seen in the U.S. for the last 5 or 6 years, and I think that's the next trade. But we are being selective because Brexit will be a long process, and there's still a lot more negotiation that have to happen.
It's funny, Brexit. Who comes up with this stuff? British leave leave the EU and we call it Brexit?
It was when Ben Affleck and Jennifer Lopez were dating, and it was.
Oh yeah, that's right.
Bennifer. That's who started it.
He's already had another full wife and divorce since then.
There are a lot
cycle.
of them, but that was the last one.
It's true. That is where it began. Stephen, good to see you.
Great to see you.
Thank you so much. Stephen Rees, JP Morgan there. Hillary Clinton's campaign overshadowed by the investigation into her use of a private email server. Coming up, the former Prime Minister of Pakistan is with us. He worked with the Clintons. He'll give us his take on foreign policy. Then Prime Minister David Cameron in the last hour of his term. More on the changes in store of the UK next.